to it. I literally, I mean, there's still sweat dripping from my brow. We just finished up the close in the room. And any of my SFers in here, give a shout out to you all. That was an awesome, not too frenzied 60 minutes. Yeah, it was a fun, yeah, Kyle. Yeah, it was a fun close for you. You slayed it. You slayed it, man. In fact, I'm just going to turn the mic on over to Kyle, and he can tell us how he slayed the close. No, it's awesome. It's awesome. So I'm going to take your questions, but I want to walk you guys through a couple things here today, from today. You know, I want to definitely tackle some questions and walk you through a few things that happened today on ES, NQ, YM, Japanese yen. We are talking about day trading futures, and I think a lot of traders feel it's just a futures index conversation, but you know, it's nothing for me to switch to a view like this, where I'm looking at what's happening on a much more sort of micro level with even the heavily weighted names of the YM. It's nothing for me to switch to a level like this on the XLF, the XLE, while I might be day trading crude oil. So I think the first thing I want to address is, yes, I think predominantly there is for sure that very awesome and productive factor of being a Dow, S&P, and NASDAQ intraday trader. No doubt about it. In fact, the markets that I like to focus on, we've nicknamed the mice markets. We are cats catching mice. And mice stands for metals, indices, currencies, and energies. So that's what I call it, mice, M-I-C-E. And if I'm looking at opportunities in metals, indices, again, currencies, and energies, there's a certain connective factor there. And that means I can open the door up to certain ETFs, to certain commodities, think gold, think crude, think unleaded, etc. So the interconnectivity, I think, is what makes it really exciting. So yes, on one hand, we're looking at shorter term time frames, for sure. And on the other hand, we're definitely kind of using what I call a one mind, many markets approach, which is when you understand what's happening in mice, you have an understanding of the market at large in a way that people who don't get this feel are lacking. So it's not just about intraday, but it's about understanding the impact of futures on your trading. And I next to the mice, I'd say my next most active market related to this are ETFs. That's definitely something that I believe in the market is often overlooked. So VR asks, I'm going to tackle some questions here. VR asks, say there VR, what are the prerequisites for Saturday class? I'm not being funny, VR, just be awesome. That's it. No, seriously. I think, and let me be upfront. I think that we thought a lot about this in terms of who is going to be showing up in the morning and understanding what John and I have been doing for, collectively 50 years, right? And what we did is we said, they need some time with Eric to understand the indicators. Done. They need some time with Neil to understand some of the basics of futures. What is really a futures contract in terms of the months and open interest and volume and what is this rollover thing? The basics are not complicated, especially if you're an options trader. If you're an options trader, my gosh, you're already mastering with simpler, one of the more, I think, complex instruments. So futures are really comparatively pretty easy, but what are the nuances to it? And so Neil's going to have a session. So I think the prerequisite is a cup of coffee, yeah? Because we're going to walk you through it. We're going to walk you through it. We know what you're going to need to know to be able to use the strategies that John and I will be using, and that's really going to be the lead up into the class itself. All right, next up is, and let me take a few questions, and I want to show you some of the trades that we took today. And one that we didn't take, like a trade that we chose not to take and the value of that, and then trades that we took into the close. And also the ability to walk into the market at really one of about 5 different times and deploy different strategies like Neil's Sneaky Fubar or any one of John's strategies where he talks about, here we go, where he talks about, end of quarter, end of month. That's a very specific calendar-driven time, right? Those are great things to have, but you're going to do it at a specific time in the calendar. But sneaky foo bars, those are amazing setups that happen when the market freaks out. We had a fat finger trade and fat finger meaning the British pound went ballistic earlier today. Currency futures, right? Big wick. And the first thing that I went and looked for is something that Neil taught me years and years and years ago. What do you do when you get that one crazy large, it could be a fat finger trade? What do you do with that kind of action? And that was one of the things I immediately was able to deploy. So those sneaky foo bars can come up at any time, and they capitalize on a very specific psychological reaction. The opening trade is one of my favorites. It's one of my bread and butter in the morning. And I'm going to show you more so than that. Not only is it a bread and butter for John and I, but I think he would also tell you it's a very good barometer for what we're going to deal with. Sometimes it's almost like an on and off switch where you get an early warning when you are able to understand what that opening swing trade is telling you. Like, oh, wait a minute, I better kind of switch it off for a little bit. It's not behaving in a way that I think is advantageous to the momentum that I would need to be intraday trading. So when I talk about there being about 5 different opportunities, that's the other great thing too. I had a bunch of things I had to do this afternoon, and I missed 2 out of 3 of some of those opportunities myself. So I looked at the first opportunity of the day, and I even add another zone. I don't know how many of you are night owls, or depending on where you live, how many of you are looking at the market, say 6 a.m. Anyone here in the room crazy like me? Maybe we need a simpler crazy room. In the most, 6 a.m. It's nothing for me to, be up at 5. Dave, you're my kind of people. So you don't have to be, right? Sometimes even earlier. I started talking to trading friends of mine. I just got back from London, right? And they're up, right? They said, Rog, I'm up. Is there anything I can do at 4 or 6 a.m.? I know you're still pouring your first cup of that crazy mushroom coffee that you love, but is there a trade? And gang, oftentimes there is after the Asian close. So I'm going to talk to you about the, not just, again, it's not something you have to do, but it really starts to get you thinking about this market in a 24-hour way. Just like I have early morning, my NQ trade ended about, 10 or 11 minutes ago. And if this were Thursday, and I'm here with you guys on a Thursday, we'd be setting up the Asian markets if that was a time we wanted to trade. And the reason you can do this, and for those of you thinking, this sounds really good in terms of, I'm in, and I hope you are. If you head on over to simplertrading.com recipe, you'll see that you can register there and join us tomorrow. Join Eric and Neil and John and myself. Okay, let me tackle some more questions here. But again, from my perspective, I would love for you guys to understand you're trading a market that you can choose when it is that you decide you want to trade it. The trick is, and a lot of people talk about it, but they don't know what the trick is. And the trick is understanding the rhythm of the day. And that's something that I will absolutely be teaching you guys tomorrow, understanding that rhythm of the day and price movement range expectations. We'll get into a little bit of that here today. But let me tackle a few more questions here. So prerequisites, yes, awesome and coffee, no problem. Frozen in China, that's a great name. So no knowledge of futures and scared to death of them. Because, I think someone somewhere along the line told us, you screw up and you end up with pork bellies in your front yard. Don't worry, we're not trading pork bellies. So one of the things that, first of all, Frozen, I'm reading your comments, and I totally feel for you in terms of experience. First of all, nobody cares more for your money than you do. That really should be sort of the unwritten, simpler motto, because we want to empower you to make the decision yourself, right? I had a broker friend, right, who lost, oh my gosh, that just pains me. I just want to bring you to have some pizza with me tonight now so we can talk about it. Can I learn a simple yet profitable strategy in day trading with futures and manageable risk? Absolutely, and here's why. And it's not because it's my strategy or John's or what Neil's going to teach you. You're going to learn. It's like a recipe book. We called it recipe for a reason. It's a recipe book. and you can flip to page number, whatever. I'm being symbolic here, but again, you can take notes and flip to that page where John talked about, say, for example, his first hour Old Faithful setups. And maybe you're trading the first hour and you're going to scan through which one of those the criteria is met for. One of the things I think somehow gets thrown out the window when it comes to day trading is people just think if they're looking at a 1-minute chart or a 144 tick chart, they're just trading momentum and just going whichever frenzied direction the market is. And it isn't really that frenetic at all. It's quicker paced, no doubt, because we're having to make decisions more frequently off a lot of candles. But the strategies, there's certain criteria that just has to be met. And once you train your eyes to recognize it, you've got your recipe book, you know what you're cooking up. And if you don't have the right ingredients for it, if the chart isn't, and I'm going to show you one of the ones I did into the close today. And you can see, oh, okay, that's what she's saying. That's the ingredients. I got it. Check, check. And then I can put the trade to work. So it doesn't have to be complicated. It really doesn't. And I don't believe John nor I, are there a lot of moving parts? I'm not going to kid you. Of course there are moving parts, but I think there's moving parts to any part of this market. So we're just going to whittle it down to the moving parts that we have found throughout each of our careers that make the most sense. All right? Okay, so thank you for the question there, my friend. Next up here, Martin, oh, okay, Daryl, you got the question with the slides. Okay. Next up, and sorry, gang, they're just scrolling through, so I'm just trying to keep up with the questions. I want to show you guys a trade from this close today so you can get a better feel for what it is that I do. I know nothing about futures. Well, I think the real prerequisite for any kind of class is, are you comfortable looking at a chart? And I'm not being simplistic about it. And maybe that's the real, to me, that would really be the big question. Can I sit in front of a chart and be comfortable with what I see? Right? Can I understand some colors, some lines, things like that? If you feel comfortable reading a chart, I think, and even if you don't, there's certain tools that I use, and they're color coded to boot. Liz, let me show you the example from this afternoon. I mean, literally not even an hour and a half ago. And then you tell me, right? Is this something you think you can do? That's one of a handful of setups we're going to teach you all tomorrow. Can we trade using the TOS platform? Yes. Yes. Mike? Mm-hmm. And next up here, your meetings Tuesday. Will I miss the basics on? No. So, Shirley, we record the session tomorrow. So you'll have that course at your disposal to watch it at your leisure, however many times you want to watch it. And quite frankly, some traders can't make the Saturday class, and that's fine. And then they'll catch it on a Sunday or a Monday, which is why we start the live trading on Tuesday, so you can attend Saturday live, preferably. You get to interact with John and Neil and Eric and myself. And then you can review it again for at least another 48 hours if you'd like. And then once you get to that live trading, you're kind of up to speed on the tactics and the mindset. So everything's recorded. I like to say if John or I or Neil or whomever are on the mic, it's being recorded somewhere. It is. Okay. So next up, so no one has to get up at 6. I was just curious. I've got some night owls who love trading the Asian session at midnight, right? It's just interesting because having come back from London in that 5-hour shift, it was really interesting. You took the TOPS class. Thank you, Greg. I appreciate that. Are the indicators different? No, I use the same indicators no matter what. I really do. But what we have are some premium versions that I think take the awesomeness that is the TOPS original. And premium is they just do a few extra things for you. Scanning across some multiple time frames and things like that. The Darvis is the same, and we have a premium wave and grab alerts and also, I believe, a scan. And Eric will be going through all that for you guys. Dave says, I want to learn the 24-hour game. Dave, I'll tell you what, I've been playing it in currencies and in Forex since late 99, and I love it. I love the 24-hour game. You know why? It's easier to control risk. People think the 24-hour game is intimidating. What I'm here to tell you is it's actually easier to control risk. So Cindy asked, what about overnight liquidity? So, let me actually take you guys into a trade that I actually have open a little bit still of, and that was an ES and NQ trade that we took from the 3 to 4 Eastern hour that I do. And the way that this happened was we were scanning our shorter term time frames. And by the way, why are we even talking about day trading? I'm going to show you a very easy way to understand why. See that box there? I outlined what the market's been doing. Do you see it looks like a 4x4 just spinning its tires in the mud? It's not going anywhere, not on a daily time frame. Therefore, what I usually like to do is look at a 60-minute or a 30 or 15 and look for follow-through. But even those time frames under this kind of limited price movement range, think about what it has to do. Get clarity, get organized, form a setup, trigger the setup, follow through, and allow us to exit. 5 things. And expecting those 5 things to happen when the market's stuck in a range, and this one isn't the only one. S&P, NAS, crude, gold. There's a number of markets that are just kind of stuck in the range. Crude's actually doing interesting stuff. We'll talk about what I'm doing with markets that are actually escaping the range. But right now we have a number that are stuck in the range. How do you know when they're getting out of the range, and what do you do then as a day trader? So we'll be definitely talking about those kinds of adjustments for sure. But overnight liquidity and what I'm dealing with right now, do I feel comfortable in a short-term time frame environment, a tick or 1 minute or whatnot, taking the trade and continuing to follow it? And we were looking at 1-minute charts, and you can see the way this thing spilled out from 3 p.m. to where we are right now. And I'm going to show you a very simple thing right now. See how I have a sea of green? Not once in our room do we even say short. Not once. Not because we're seeing into the future, but because the kind of tools that I use were indicating the flow of the river is up. Visually, it's just color-coded. And if I add another nuance to it, which is, see those little dots that are plotting? Can everyone see that? The dots that are plotting on my chart? This is one of a handful of, this is the most basic. But I want to leave you guys with something you can use. Directional and acceleration. Directional and acceleration. This kept us buying all through the 3 to 4 o'clock hour. Easily. Because we knew that that's where the organization was. And what's even more interesting is you'll notice I'm scanning across multiple time frames. The other thing those 2 simple tools do is tell me which time frame to focus on. Because there'll be times at 144, 233 look like they're just falling down the backside of the mountain, or worse, they're choppy. And they're not giving me an organized look. Knowing if a market's organized is one of the easiest ways to choose which time frame to focus on, because I don't believe there's a magic time frame. But what I will show you is how to understand which time frame is going to give you the best shot at getting the follow-through. And those are 2 of the basic tools to do it. All right, so I wanted to show you that there. Same thing happened on the ES. Same thing. And the reason I was confident going into the 4:15 and then waiting after 4:15 Eastern into now 4:30 was that I still have the organization I want to see. In fact, on the ES, it's even better. Right now, targets and so forth. And by the way, every one of these lines and levels on my chart, they're automatically drawn. Nothing I have to do here manually, and you guys get that with the class. All right, let me tackle a few more questions here, gang, and thanks so much for these questions. How much cash do I keep in margin account for each account I trade? Dave, it depends on the contract, and it depends on whether I've got a day trading rate and whether or not I'm going to take it past that day trading rate time. But we'll definitely cover that in more depth, but just kind of in a general way, it depends on the contract. And I don't take advantage of day trading rate on all contracts. Not all of them offer them. There's a lot of markets that I do choose to day trade that may not have a day trading rate, but most of them will. So you will have a much lower initial margin cost. And then as far as how much you keep, to me, it's going to be calculated based upon what I think my risk is. And that's where I use this price movement range tool, the proprietary tool that I show you guys how to use, which I will show you how to get for free, by the way. But it's a proprietary tool that I use. It helps me quantify how much price movement is going to be, I believe, very likely experienced by the market. And then once I assign a dollar amount to that, I've got a pretty good idea of what my risk is, and then I can go about making better decisions like you asked. So great question, and I will show you a tool to do that. And that tool, by the way, it also helps you identify when you should be taking profit and realistically what a stop loss should be. Okay? All right, gang, thank you for your patience. I'm just making my way down these questions. And again, what we're focusing on here, let me emphasize again, I'm going to show you guys another chart. What we're emphasizing here is how do we handle markets that have increased in volatility suddenly, right? BTFD got punched in the face, didn't it? By the you-know-what dip, and we went into chop. And in that chop, and I remember talking to John just around, I don't know, about the 8th or 9th, thinking, what just happened? And is this really now some of the best day trading opportunities we're seeing, which is, this wasn't something we were anticipating doing in February. No way. Into March? No way. But the market shifted. And not only are we trading with a lot more volatility, in some cases 2, 3, and 4x daily norms, now we've actually adjusted again to a smaller range within what is a distribution market. So the market is demanding, I feel, that we understand the message of the futures markets and how to adapt to the kind of price action, the kind of market trends that we're dealing with. All right, so yeah, again, let me just keep scrolling through. And by the way, I'm not even touching on market internals yet, because that's something that's best done when John actually walks you guys through the specific things that he looks for. Nobody reads market internals like John. I've never met anybody. In fact, I didn't even use market internals until I really sat down with John and learned what he did. And mind you guys, I've been doing this for 3 decades. I didn't even use them because no one explained them in a way that was kind of like an on-off. It's got to be this, it's got to be that, it's got to be this. And he just reads them very, very well. And I thought after that, these are actually useful to me. So I think a lot of people who look at market internals because they think they're supposed to, like I did for a long time, and I just really didn't know what to look for. I didn't understand the nuance and the interplay. And that's where I think John really, that's one of the most amazing skills he's got, is that market internal reading. So you take a lot of these setups, whether it be Neil's or mine or even John's, and then you look at the market internals. I'm actually looking forward to sitting and getting a refresher myself, because, you know, the markets have suddenly shifted. I was in buy the dip mode for most of the year, and it was a great time. But now I, too, like you guys, are shifting gears to something that, you know, I didn't anticipate having to do, and here we are, which is what makes it so timely. And is this the first time this has happened? No way. You know, these adjustments happen all the time. And I think if you guys have this gear to shift into, you recognize the environment and you go, oh, wait a minute. Oh, now I know what to do. Blue grab candles, sideways, 2x volatility. We broke the trend. You know, once you identify what the environment looks like, when you go shift over to more of a day trading approach, that's really, I think, the value in knowing when it is that you turn this on, if you will. Okay, next up here, gang, let me tackle a few more questions. Do the futures help with? Yes, Liz, I do absolutely believe they do. And it's the mindset, to me, that I have when I look at, say, the Dow and all the internals of the Dow. Internals meaning the actual holdings, right? And then that same mindset, to me, extends out to the ETFs. And then, for example, if I'm watching the S&P, the XLE, XLK, and XLF are never far from my mind. What are the green dots called? Right field, they are called the propulsion indicator. The lines are automated support and resistance, courtesy of Mr. Eric Purdy. And they're based on, but not solely, Darvis. I kind of call them Darvis 2.0 or modern day Darvis. And they are amazing. They are amazing. In fact, part of what's very important is to understand that more so than another kind of trading, you need to have certain analysis automated because of the sheer speed of the market. If I had to draw my support and resistance or understand the acceleration of the market in a manual or subjective way, there's just no way I could keep up. So having certain tools that do the heavy lifting for us, which is why we've included them in the class. And again, if you haven't checked it out, you can check it out right there, simpletrading.com/recipe. The reason this is so important is when you're dealing with markets that are moving as fast as these, as a tick or 1 minute or 3 minute R, you don't have the luxury of drawing what I call sometimes precious little snowflake levels. The subjectivity and the time they take just is very prohibitive. It just is, time prohibitive. So yes, Brandon, absolutely. Infinity and Sierra, you bet. You bet. The ones that I'm showing you, you bet. Right now I'm on TradeStation. Yes, Lewis, I am on TradeStation. I sure am. Where can we get more information about the components of the masterclass? Dave, I would just head on over to simpletrading.com/recipe, and you'll see everything. And take a minute because there's a lot included. There's a lot included. We really thought about not just how to make sure you can navigate the markets now, but as you become a savvy and fluent day trader, as you build upon the building blocks that we'll teach on Saturday, and then you're ready for the next step and the next step and the next step. That's what that class really does build upon. You take Saturday, you take the live trading, and then you say, I get it, and now I'm more confident. Like it's a muscle. Your day trading muscle now is, buff. And then you can move on to what's next. And that's check that out at simpletrading.com/recipe. All right, gang. I have a lot of charts on my screen. Tan, I sure do. Do I use all of them, or do I use a couple to pull the trigger? Tan, I'm always looking for clarity. And to demand one chart to give me the best clarity, it might look intimidating at first. I think that could be true. But once you understand that sometimes it's as simple, not sometimes, most of the time, it's as simple as reading colors and dots, and then you understand what time frame you should ignore and which ones you should then focus on, it really isn't all that intimidating at all. And then another aspect of it I got to mention is, time. I'm looking at market clarity and time intraday, but then, time is a big component of this. And when you look at a lot of the strategies that John and I are going to cover, the time of the month, end of quarter, end of month, time of the year, time of day. I've talked about trades that can take you from, say, 4 or 6 a.m. or trades that you can look at 8 p.m. Time is a big deal when you're an intraday trader. It absolutely is. So that's another aspect, I think, of it that traders overlook, and they're looking for certain setups, but then they omit the idea of what time of day is it, which market participants are just starting off their day, which ones are leaving, and how does that affect the different setups that we're watching, and then how do those time rhythms help me with profit targets and so forth. It's, it might seem like a lot of moving parts, even like my charts, but then when you know what to look at, like any kind of instrumentation panel, I don't know if there are any pilots here in the room, I know Mr. Eric Purdy is, but once you understand what you're looking at for information, then you just kind of zero out the things you don't need until you need it. So, all right, next up, gang, and thank you. I'm going to take a few more questions and we'll start to wrap it up. Do I use range charts? Dave, I don't. I use tick charts the way John has taught me, and I use predominantly 1, 5, 3, 2, 1. That was a really weird order. 1, 2, 3, and 5 minute charts, predominantly. And then if I can't find clarity there, I'll dial it down to a tick chart looking for that price action clarity that I need. The neat thing about trading intraday is that you actually do not need as big an account, in my opinion. And we'll talk a lot about this, and I would imagine Neil, John, and I might have slightly different opinions in terms of the kind of risk that we associate with our trades, but I'll help you quantify what the risks are with the kind of trades that I take in a very historically accurate manner. And because you're really limiting the time exposure to the market. One element of risk is time. You know, another element of risk is volatility. And I think the last element of risk is the one that you actually can control, and that's your position size, right? So I think once you understand volatility and you understand the typical price movement range, right? That's something I'll be sharing with you all. So I think when you look at it in that regard, you can decide then what kind of size you're going to trade and what kind of markets, volatility-wise, that you're comfortable with. Okay, do I trade range short? No, okay, sorry, Dave. No, I don't. Do you have or can you suggest the best Darvis read? Neil, I've read Nicholas Darvis's book. It's a very interesting, almost like trader biography. But I don't feel it's very instructional. And at the end of the day, it's support and resistance. And what you do with support and resistance, in my opinion, should be predicated on time of day, underlying volatility, and underlying market trend. So will I be using TOS too? So the same tools that I use look pretty much identical in TOS. I might pop into TOS, but they look almost identical in TradeStation or TOS. All right. Next question. If you're curious about what indicators come or what comes with each class, the different levels of the class, yeah, just head on over to simplertrading.com/recipe. The tools that I'm sharing with you right now are going to be part of that, as are actually a whole bunch more. Here we go. So the simpler ticks right there, the Holb and Loeb, I don't even know how you would, the HOLB and the LOLB. So these are the tools that John and I, and those are John's tools and also my tools. The ones I'm sharing with you guys, yes, they are available, will be part of them. The premium, yes. And the Grab and Wave Premium, it has alert built in, and I believe it also has now, it scans across a higher time frame to show you what the clarity of the market is on a time frame larger than the one that you're looking at, almost like in a multiple time frame kind of way, with focusing on the market trend clarity. So it allows you to keep your eye on one chart while you're realizing what the bigger picture is, which is convenient for sure. Are the dots included? Yes, I will show you how to get every tool on my chart tomorrow. Every single one that I'm showing you, I will show you how to get tomorrow. You bet. Let me see what else we have question-wise. So alerts on, you're talking about for members? Day trade, I think it depends on, now during the live trading we will send out alerts. I think if we're trading a tick chart or a 1 minute, I mean, I'm not going to speak for John, but I know for myself, and I'm not going to speak for Neil and David, who will also be in the room. 1 minute tick charts, I'm not going to tell you that it's one of those things that always are going to be alerted. I think if they're slightly longer term, say 5 or 15 or 30, John has shown an example where on a 30-minute EX, I think, he slayed the market. That was one of the emails that you guys got. Those kinds of longer term time frames with a day trading approach, I think those are certainly ones that can be sent out. But if it's a tick chart, probably not. It's just the speed of it doesn't lend itself out to it. But yes, when we do the live trading, we do send out alerts. All right, gang. So what else do we have here? As far as the indicator questions you all have and what they do and how to install them, that is exactly why we're going to have Eric. Eric, I think you're kicking things off tomorrow, I think. So, yes, he'll be explaining all that to you guys tomorrow. And what other questions might you guys have for me? And again, I want to just kind of show you here, a lot of what we're going to be talking about. Everything from the wire money out every week cash flow strategy, how to use ETFs and stocks, how futures are really the crystal ball, and they really are. In fact, the mindset for them dissecting these futures and understanding what stocks and ETFs are doing, absolutely. That mindset and that approach, even using currencies, that's something I use as well. When the markets actually started to rally, one of the first things I noticed was that, one, there were shorts in the yen, and the yen started to weaken. So this is a great 1-2 punch. As the NQ and the ES started to rally, the yen just fell out of bed. So you'll have these complementary confirmations and or trades that'll happen at the same time, which, again, just increases your confidence if you know what to look for. So everything from hedging your portfolio with futures, the end of quarter, the end of month trade, Neo Sneaky Fubar. Again, just this morning I was looking at that with a big wick on the British pound futures. Opening swing trades, 3 first-hour Old Faithful setups, 9:30 reversal. I use a 10 o'clock as well, and John's got a really cool setup, an intraday setup with a monstrous win rate, and we're going to be showing you guys all that. All right, so let's see what else we'll have here. Time to hit the waves. I hear you. Hot dog, I hear you. Yes, I don't know if anyone's out there with Sketch. That'd be great. We'll let you know. And everything is recorded. Will the daily price movement range? No. Yes. I will show you guys how to get it for free, how to use it. Yes, I'll be talking because it is part of targets, right? And so DPR and Darvis is definitely part of it. And then, just understanding what the typical price movement range is, that's kind of the fourth step to me. And I'll cover the mechanics, and I'll give you guys also a doc that helps you do the arithmetic. But at in the live trading is when you're really going to be able to see it, I think, kind of in that live environment. You'll be able to do the calculations, and they will blow your mind. Yeah, you bet. You bet. Okay, what else do we have here? Did I miss any questions? And I'm sorry if I did. But did I miss any questions? Now, a lot of those indicator questions Eric will cover in the first part of our class tomorrow. Okay. I think that's it. Yeah. All right, gang. Okay, so again, we'll be starting tomorrow. Head over to simplertrading.com/recipe to join Eric and Neil and John and I. And I think we're starting at 10 Central. 10 Central. And then 10 to 11, 11 to 12. I'll be coming on at 12, and I believe John will be coming on at 2 and walk you through these setups and a whole bunch more. All right, of course. My pleasure. My pleasure, gang. Thank you so much for the questions. I appreciate it. I'm looking forward to seeing you guys tomorrow. All right, gang. Again, if I missed your question, gang, I apologize. Let me see. But if I missed your question, I apologize. There's quite a few of them. I think I got to them, gang. All right, gang. Have a great one. I appreciate the time. Baha, I just didn't see the question. If you want to type it in again or just copy and paste it. Sorry, my friend. There's quite a few lines of text here, and these 46-year-old eyes have been trading this morning since about 6, so my sincerest apologies. When placing a future, okay, I see it, thank you. When placing a futures order to buy or sell, can the price pass your order without executing? Oh, Baha, yeah, it's going to be a matter. So liquidity, right? Can I say that's really like a liquidity question, right? The concern about is there enough liquidity to get. So if you're placing limit orders, if you're placing market orders, can it Sure, I think it depends on the speed of the market and the liquidity. Absolutely. It can happen. I'm not going to tell you it can't, but it's very rare. And one of the things that we try to focus on is, having you trade at those liquid times, having you understand where to put those orders so you're not going to deal with those. But there's no way to absolutely eliminate that. But can price pass your order? I think it's going to be a matter of what type of order you place and the liquidity. If you use a limit order and there's plenty of liquidity, no problem. If you use a market order and the markets are moving very quickly, problem. If you use a stop order and the markets are moving very quickly, yeah, there could be. There could be. But I think understanding the rhythm of the day and when those events typically occur, which actually by and large, most of the time, you can look at the economic calendar and understand the rhythm of the day and avoid those times or account for them. Yes. So I appreciate that. Thanks for posting that again. I don't know about active trader, my friend. That I could not tell you. I traded futures predominantly through Sierra, through TradeStation, and through Thinkorswim. But that I could not help you with. Okay, gang, it's the top of the hour. I'm sure a lot of you are ready to call it a day. And I will see you all tomorrow. So will there be trading? Unless we're trading Bitcoin, Kyle, probably not. But I don't mind looking at it. All right. Take care, everybody. Appreciate the time, and I will see you tomorrow.